Hello, everyone, and welcome to WooStream, where we're bringing Willamette to you. I'm Eric Lasan, and for today's presentation, Matt Benjamin will discuss strategies to help business owners manage during these uncertain times, what you need to know during COVID-19 with the CARES Act and business planning. Matt is an alum from the class of 2002 and also earned his MBA from Willamette in 2005. He's the current president of the Alumni Board of Directors, on which he has served since 2013. In his work as managing director and wealth management advisor at Northwestern Mutual, Matt has hired over 100 interns from Willamette through the years and currently employs several Willamette graduates. He's been active in the AGSM mentorship program since 2006 and volunteers as a panelist at professional development nights as a mock interviewer and by providing resume reviews on campus. Thanks for joining us today, Matt.
Thank you, Eric. Welcome, everyone. I am excited to walk through some of this riveting information about the CARES Act and how this could impact you individually or your business. And Eric and I were chuckling right before we got started here. In prepping for this, we were anticipating Trump signing a bill to increase aid. He just did that this afternoon, so we may want to make this quick so we can all get out there and make use of some of these programs. Essentially, as a start, one of the things is this is a new world for businesses moving forward. We're going to focus a presentation today on the CARES Act specifically, some of the implementation items, some of the planning techniques you can use as a business owner, but also as an individual. I'm going to cover a lot of information very, very quickly. So there's likely going to be lots of questions at the end. Feel free to send those over to Eric as we go along. But also I'll provide some resources along the way because most of this information is pulled down from the SBA website and obviously information online about the CARES Act. As we think about this pandemic and how it's going to affect us, obviously there's some far-reaching concerns about long-term economic turmoil that could impact not only individuals and businesses for the long term. And specifically with the CARES Act, one of the things we're going to really cover and what we want to focus on today is really just covering in a nutshell, what's going on, what are some of the provisions. There's a whole lot of them, and we're going to pay focus to a couple specific things, but I'll try and cover as much as I can. That focus is really going to dial into the loan options. I think that's where a lot of folks are asking questions from the business owners I'm working with. How do loan options work, and what might be the right thing for each person? What are some common questions and planning techniques we're getting? And then we're going to talk a little bit about what's next in terms of the CARES Act, and some of that I've already mentioned has already gone into legislation signed today. So let's jump right in. So summary. The CARES Act obviously is an acronym here. So it was signed on the 27th of March. And the main thing about the CARES Act, with the revision today, of course, was it really was providing, one of the key components was just to make sure employees got paid. And so there were several things that came out of this, some increases to unemployment insurance, a lot of enhancements there, $600 more per week in additional funding for applicants. Also, some enhancements in who can apply and how long those benefits last. And as I go through each of these, keep in mind, I'm gonna hammer through these really, really fast. And so there might be some questions, but I want to focus on a few at the end. And so I'm going to cover some of these that are less important for businesses. I'll focus on the business ones mostly here. Second thing is rebates for Americans. Obviously, several people have probably already received those rebates. There's some modified adjusted gross income limitations from your 2019 income that may either restrict or minimize what you may get, but $1,200 for single individuals, $2,400 for families, and $500 per child as a rebate. That was really meant for just stimulus in the economy and provide some stability during this time. The special use of retirement accounts is really one of the things I know both Barry and Bob in the prior presentations touched on some of these a little bit, but Retirement funds have a lot of flexibility. One of the things is they've waived early withdrawal penalties on up to $100,000. So if you're prior to the age of 59 and a half, you can take some money out now of your retirement accounts without paying that 10% excise tax penalty. Key note there is you will still owe ordinary income taxes on those distributions if they're not put back in. They're just waiving that 10% penalty that would normally be incurred. They've also increased the 401k loans. Used to be 50% or $50,000. It's now $100,000 or 100% of your 401k. This one specifically is a creative tool that some business owners may want to use if they have a 401k and they're struggling with some cash flow or financial issues. Getting a little bit of money out of your retirement plan, using your retirement to fund any cash flow needs is never typically the best advice. But if you're in a pinch and you need to borrow some extra money, this could potentially be an option. Some folks are asking us lots of questions about what if I don't have a 401k? What if my plan doesn't allow for it? There are some ways to work around it, but that's a person by person and plan by plan specific thing that you'd want to check into. But we can certainly answer some of those questions if there's some additional ones on the 401k. And then, of course, the temporary waiver of required minimum distributions. This is great for people who are in retirement, who maybe saw a depleted portfolio with some of the stock market dropping here more recently, and maybe want to keep some of that money in their retirement account and not be forced to take out a required minimum distribution. As part of the SECURE Act that just came out prior to the CARES Act, required minimum distributions did get pushed to 72 instead of 70 and a half. So there's some good things that are already happening there. But if you, as an individual, want to hold off on those, that's a potential option for you as well. And of course, part of the just providing extra revenue to the federal government provided some grants for each individual state to provide some specific funding. And so a lot of the programs I'm going to talk about here with the Small Business Administration are really federal programs, but there are several state-run programs that I'm not going to address at all. So you may want to do some research into the state specifically and or county because there was about $100 million in grants put out to the states for additional funding enhancements as well. So additional items. One of the things that came out of this was some charitable contribution options. The charitable contributions, I think one of the coolest ones is the $300 above the line deduction. So a lot of folks now with the increase in standard deduction when you're filing your taxes, a lot of folks don't even itemize anymore. And if you're not itemizing, you wouldn't normally be able to write off charitable contributions. But the $300 above the line means you get credit for up to $300, whether you itemize or not. And that's a great opportunity right now to provide some extra cash to your local charity who's probably also struggling as well, and get some potential tax incentives from that. The other part that they modified is some of the limitations on businesses and individuals on the percentages that they can give. So notice for individuals, the 60% cap is lifted, and as well as the 10% cap is bumping to 25% for businesses. So this increases the capacity for us to get some tax incentives for charitable contributions. And it could be a really good individual planning tool if you have a desire to do some philanthropic things, and potentially you have maybe appreciated stock or something that you want to get out of your estate and or pass along. There's a lot of opportunities now that have opened up with some of the charitable contribution planning that could be done this year. Student loans, exclusions for employer paid payments, there is some limitations here, but if your company is paying, or as a company, if you're paying for student loans, you can exclude those from taxable income for the individuals, which is great. And it might be a way as a business owner, if you're looking at ways to potentially help out and increase some of the financial support you can provide to your employees during this difficult time. That could be one of those things. We'll talk a little bit about student loans here in a second, but as a business, it might be something that could be interesting as well. The payment due dates for all federal student loans have been extended. So if you have a financial hardship and you cannot pay those loans, you can defer them through September. I think this is a great opportunity for folks who are in a financial bind, still have student loans, and are looking at cash flow options to save some money. I am throwing a massive caveat out to any client that we're working with that even though interest is not accrued and there's no penalties and there's no credit hit on a lot of this stuff, keep in mind if you are deferring any payments, it is going to set back your ability to retire that debt. And in some cases, some of those things will be needed to be paid back in the case of mortgages or other types of things. So be careful about what you're pushing off. But student loans, federal student loans specifically, is something that no interest or penalties can be deferred or suspended through September. And as part of that, as I just mentioned, the credit protection and foreclosure moratorium, excuse me, these are on federally backed mortgages specifically. Essentially, it's saying that we'll protect your credit and borrowers can push back their mortgages for up to 6 months, and no penalties or fees or interest accrued on those things. I would say make sure you're talking to your banker or mortgage broker about anything that you're planning to do before doing it, because some of those private lending institutions are not quite as lenient on their rules, and some of that will need to get paid back. So be sure to check with your local lender before making any changes to your loans. So let's talk a little bit and let's focus. I went through those pretty quickly. I want to spend a little more time on some of the business provisions. So first off, retention credit for employers. So one of the nice things that they put into this plan, in addition to some of the loan options that we're going to spend a lot of time on in a second, is the credit for retaining employees. So essentially what you're going to be able to do is you can partially or fully suspend some of the gross income, and you will get some of that money back in terms of a tax credit. And so I think there's the challenge with this one is it will not be available for folks who apply or get the PPP loan. A lot of the programs don't work together very well, but if you do keep employees and you keep them around, there is some tax credit on the taxes that you would pay for your employees that you could get in following or subsequent years. The next part is you can delay your employer taxes, your payroll taxes. I'm typically not advocating this, because anytime you delay a payment, it means you're going to have to pay it later. But if there are severe cash flow issues and you want to defer some of those payments till down the road, you can defer those and spread them out over a 2-year period. And so that's something that you can potentially look at as an option if cash flow is tight right now. If you can pay those taxes, I would advocate that you continue to pay those, just like any other expense that you can continue paying. The next one is really a planning area that is less known in this act that I think some folks could potentially benefit from. But the modification of the net operating loss is something that the best way I like to think about this is, if in 2020 you have a substantial loss, let's say you're a restaurant and you lose a bunch of money in 2020, what this is going to allow you to do is go back potentially 5 years and offset any income taxes you paid. You'd have to file an amended tax return, of course, but any taxes you paid in prior years could be offset with losses that you had this year. And so if you have a net operating loss that's pretty massive this year, you could go back and claw back, get some of those taxes back that you've already paid. This could particularly be interesting for corporations that have benefited more recently from some of the tax law changes in lower income tax brackets. More recently, they could go back to some of those returns maybe 5 years ago, and at a higher tax bracket that they were paying with maybe more income, they could get some of those taxes back. So this is something that I would definitely check into if you're having a really tough year this year. It also allows for both the carry back and look forward in terms of what taxes could be avoided in utilizing that net operating losses in either current or past years. So it's an interesting one that you might find some value in, particularly for those companies that have been really devastated this year and are going to have a loss. The last piece is, and this is where we're going to spend a lot of time on today, particularly with the announcement today. I think there's some really good news here, but there's about $500 billion to the Department of Treasury for basically, stabilization and putting money out for loans. And a lot of this is for the Small Business Administration programs that we're going to talk about here in a second. Let's jump right in. So I think this is where the meat of the presentation is going to be. I want to be conscious of time here and know that we are going to need to cover this really, really quickly. But there's several programs that exist. The SBA debt relief and the SBA Express Bridge loans are things that have been around forever, as is the EIDL loan. And the EIDL is Economic Injury Disaster Loan. All those have been around for a while. They're just enhanced essentially under the CARES Act. The one that is getting a lot more attention is the PPP loan, or the Paycheck Protection Loan on the left. And the Paycheck Protection Loan, part of the reason it's getting so much attention is if the rules are followed, that loan is potentially forgiven. And this is one of the loans that came out as part of the CARES Act to really help keep employees around. So in essence, they'll look at your last year's wages. You can get up to 2.5 times your monthly earnings, monthly payroll, in addition to some other expenses that could potentially be rolled up into there. And that loan could be forgiven at the end of the year if you keep your employees around. This is a loan that if you have not applied for it, the loans, essentially the EIDL and Paycheck Protection, ran out of money within 13 days when they were launched. The feds just, and Trump just signed a bill today that reinfused some money. I think I read $484 billion was the number. And there was some challenge or frustration with the PPP loan specifically because a lot of the banks were prioritizing larger debts. So companies with much higher loans, they were prioritizing. And a lot of small businesses did not get those loans. So they specifically allocated money for small businesses with the PPP, this new line. If you have not applied for that, I would go to your bank as soon as we're done and potentially hop in and get in line, because a lot of the people that already applied are in line already. And so I have a feeling the money is going to go fast again. This is a breakdown. I apologize for this slide. I actually stole it from a bank we were working with. They put together a really nice piece that breaks down how these loans work and what the options are. But I think what I'm happy to share this slide, and I'm happy to send you anybody the PDF that accompanies this that would actually give you more details. But I will say, if you go to SBA.gov, all these loans are on there on the SBA.gov website. So I would encourage you to go on, do a little bit of research on each of these loans. A couple key things that we're seeing as part of the PPP loan, if you do take that one, understand that the forgiveness of that loan does potentially challenge some of the other lending that you can do. They don't all work together. So I would certainly work with your CPA or your attorney as you're looking at these loan options. But for a lot of folks, the forgiveness of the PPP is what's really attractive right now. I'm throwing a little bit of a be careful with any of these loans that are specifically related to the CARES Act, because one of the stipulations is that your business should show some economic hardship from the shutdown or from coronavirus-related issues. And I think a lot of us working from home right now could probably demonstrate that there's some issues. But at the end of the year, if you haven't lost any money and there was really no slowdown in your company and things were plugging and chugging, I'm a little concerned that all the stuff they're talking about forgiveness, that people are taking money and not thinking about the fact that it might have to be paid back, and that there are very specific provisions. I always worry that this has to get paid back by someone, either taxes or individuals. And what they're publicizing right now is there's a lot of little fine print in there that I think they could come back and catch people that aren't really having economic hardship, but are just applying for loans because they think they're going to get them forgiven. I will say with the PPP, though, on a worst case scenario, it's a 2-year payback at a 1% interest rate. So if you apply for that and you get it, I would advocate being very specific, setting it in a separate payroll account, only paying payroll with those dollars so you could demonstrate that you used it for payroll, because that's one of the provisions, and also making sure that you're documenting very well any hardship issues that were happening to your business over the course of the year. The other loans are a little bit more broad in terms of what you can get and how much, but the goal here was to provide businesses with some favorable financing options that could allow them to keep employees, keep running, and push through this difficult time. For the sake of time, I'm going to move through the next couple slides pretty quickly, but this is some considerations, and I'm happy to share this presentation with anyone. But it's a great page just to kind of get an understanding of which loan might be right for me. I will say the PPP loan and the EIDL loans with this new round of funding as they've opened back up. Like I said, if you have not applied to a bank already, I'd be calling your banker as soon as we're done and potentially getting more information and applying for those things. There's a lot of people that applied and are still in line, and I'm afraid in a few days that money's going to run out again. So if you're not getting those things, take advantage of some of the tax credits that we mentioned before. Also make sure that you look at what other SBA potential options, if you're looking for favorable financing, that could be out there, could be available for you. So what are some common questions? I'm going to cover these pretty quickly, but is the money from the PPP taxable? That's something that there's been some guidance on some of these things, but I will say there's a lot of uncertainty still on how some of the tax is going to flow. Our understanding is the PPP is not a taxable income, but we're not really sure on whether the expenses used to pay out of the PPP funds are going to be deductible or not. So that's something where there's going to be some guidance or some ruling that's going to have to come out. Also, something that we're getting asked a lot is, can self-employment income count towards these? You can, up to $100,000, utilize self-employment income from your 2019 net operating income. And be careful on this one, because if you don't have a loss, as we've talked about before, self-employment income is one that I have a feeling going to come after more so than maybe employees that you would utilize for just a wages that you would pay under the PPP. But you can, under the PPP loan, include up to $100,000 of self-employment income as part of that calculation that you'll do for your average monthly wages. And then, as far as forgiveness is concerned, we're getting a lot of questions about the forgiveness piece. I'd be talking to your banker and your CPA and making sure you're following the rules and you stay informed on a regular basis. If you do take any of these loans, I would be not planning that they're going to get forgiven. And if they do, then that's a bonus. And that's something that I think is just going to be good sort of rule to follow moving forward. I've ironically gotten several questions about, can I take the PPP loan and invest it in other things, like maybe go buy real estate or put it in the stock market, since the stock market's down and it's a great time to buy. If you get your stimulus, the rebates, certainly that's money that you could utilize for any kind of need. That's a financial planning question that you'd want to sit down with your financial advisor and really say, okay, is it better to pay off debt or use for long-term savings? I did get a question around that stimulus or the rebate. Is it taxable? It is not going to be a taxable event. So a lot of questions and a lot of miscommunication on the internet about that stimulus. It is not a taxable thing. Keep in mind, if you are filing for unemployment, that's different. But the PPP loan, I would absolutely not be using that for anything other than paying the 4 or 5 line item things that it allows for you to pay, which I believe is payroll and rent and maybe utilities or something like that. Because if you do, it will violate the rules and you'll definitely not get the money back. And then for a lot of business owners I'm working with that are struggling for cash flow, I'm getting questions like, should I stop my qualified plan, or can I cancel my employee benefits or other things? There are rules. You definitely want to talk to the providers that are helping you with those things. Qualified plans are a little more specific. Obviously, if employees aren't getting paid, there's usually not qualified plan contributions. However, terminating plans and terminating employee benefits like health insurance, be careful, because remember, people are potentially relying on those benefits, even if they're on furlough or unemployed or laid off. They might be on COBRA, and if you cancel all those benefits, then you are going to cancel them for everyone, essentially. So we're trying to work with maintaining as much of this for our employers as possible. and figuring out better ways to finance it without having to cancel everything. Other planning opportunities, I think we talked about the charitable giving a little bit. I think that's one. Specifically, our affinity towards Willamette, we're all here for $300 above the line deduction. I love that. So there's still time in the giving year to give to Willamette. I think we've got another month or so here under the current fiscal year. Also, the net operating loss for businesses that are losing a lot of money, really talk to your CPA about that and whether that might make sense for you, looking at prior year's taxes and adjusting. And a lot of what we're talking with our clients is this is a new norm. So as a business, if you can keep things afloat and keep employees, coming up with strategies to work from home better, and also understand that with unemployment so high and such a high volume there of people filing for unemployment, there's a lot of talent that's out there that potentially could be added to teams. And so we're advocating to try and stay business as usual as much as possible, and be searching for talent in times like this, because I think it could be really, really a great opportunity to increase your ability to come out of this shutdown and coronavirus situation in the most effective manner. So I'm going to transition to questions. I went a couple minutes longer, so we might have a few less minutes for questions. But Eric, why don't you fire them at me, and I'll see if I can actually answer any of them.
All righty. Well, Matt, first of all, thank you. And I think you might have set a record for the volume of information you were able to cover in a pretty quick time frame there. So that was awesome. All right. So here is a question. Concern I have, PPE dollars given to a company, yes, for payroll, but this is not intended to be for bonuses, et cetera, for employees, and then executives in parentheses. If this were, quote, in quotes, found out to be used for this, does that equal trouble? Does that make sense?
Yeah, it does. So it's a great question. And I think one of the things that you're definitely going to want to do if you are looking for these loans is understand the parameters. This is potentially going to impact potentially larger companies far, far more than it will smaller companies. But there's a wage cap of, I think, $450, $475. So if you earn, any executives or anybody earning more than that amount, they are unable to pay them any more than they earned in the prior year. So there's some very specific rules around what they're able to do if they qualify and get the PPP loan. And I think there's going to be a massive backlash of challenge in folks with their executive bonus programs and the compensation structures in years to come that took the loan without really understanding the ramifications of what that might look like. I think what there needs to be some ruling on this, obviously, as to what will happen specifically. What it's saying right now is it's essentially going to be a reduction in dollars that are forgiven potentially by any violations of the rules. So if you're not using the money for the appropriate things, then they're going to not allow you to have that money forgiven, is my understanding. I don't know that there's a 100% in or out if you violate rules or not, or if it's just the money used for specific things. But that's a great question. I would say if you have employees that are over that, mid-4 range, then I would pause significantly before taking those PPP dollars.
All right. Thanks, Matt. Maybe just highlight one more time that federal funding just became available. Talk a little bit about that. I do notice, or have been noticing every time you mentioned it earlier in the presentation, that we lost another participant or three. Well, yeah, the short of it is, when this ran out of money, I think there was a lot of frustration out there with folks because there's a whole lot of people that applied and the money went really, really fast. I think there was a lot of industries that didn't even apply, like dentists, medical really got in trouble because one of the provisions of the PPP is once you get the money from time of, I think it's either from time of funding or time of approval, you have 8 weeks to pay out those dollars, and that's what's going to get forgiven back in. And so for folks who are can't even work right now, like a dentist, they might not even be able to apply for the loan because they can't really pay their people until they go back to work. So there was a lot of frustration around people applying that probably didn't need the money, number one,
and applied anyways. A lot of people applied to 5, 6, 7, 10 banks, and so they might have got approved with multiple banks and caused a real backlash in the banking system, or slowdown, I should say. And the third piece is, the people that couldn't apply, there was a lot of frustration. The money ran out so fast. So the feds went back and created a new pool of money that just got approved today. So that new pool of money has opened the program back up. I will say, as fast as it went last time, I am presuming that it will go even faster this time because, of course, now people are going to be on their toes and far more aggressive about getting this stuff in. But we'll see. But yeah, that just got signed today. So if you have not talked to your bank, I would absolutely go back to your bank and see what options are available and if they're still accepting applications. I know several banks have not. They just said, yeah, even if it opens back up, we're processing the applications that have already been submitted. Once all that goes through, if there's still funding available, then we'll let people apply for more.
Okay, very good. The next question, as far as mortgage on business property, is the PPP only allowed to be used for the interest portion? And if yes, do you know why?
That's a good question. I don't know the specific answer to that question, unfortunately. That would be a good CPA question. My understanding is, as part of the PPP dollars can be used for the mortgage payments. I think if it were me, I mean, in terms of what you're qualifying for, there's pretty specific things that the SBA application asks for, and you could certainly add in more of those things for getting additional dollars. But I would probably lean towards providing as much, if not all of this, towards wages and benefits as much as possible, and that's going to be your probably most likely case of getting it all forgiven and not getting into trouble. Our concern on some of those things is, are they going to look at different things with hey, they got to get this money back at some point. So they're going to look at all these little loopholes, and I think those loopholes are going to create opportunities for the government to come back and say, sorry, we're not going to forgive this now. I believe that is going to be one of those areas that is going to be included that has a little more scrutiny, as is like self-employment income probably, and some of the other things.
All right, thank you. And maybe to start to summarize a little bit, I think that some folks many folks have been in kind of a shell shock mode, and I think there'll probably more waves of people in that, finding themselves in that kind of moment of, what do I do? Whether it's a panic or whether it's just a kind of freezing in the headlights, not sure where to go from here. If you were to summarize, in the beginning of your presentation, you talked about, some of the personal things that people should be considering. But if somebody just got laid off, what are the top 3 things that you would ask them to do? And then to switch back to the business side, if somebody's business is really being affected right now, what are the first 3 steps you would ask them to take? Probably the first one being what you've been advocating with the new financial, with the federal financing that's become available.
Yeah, I think first off, as we would advocate for anyone, whenever there's change, I mean, I think the most important part is have a plan and a strategy. And so I'd go back to whatever plan you have, whether that's a business plan for your business or whether that's a personal financial plan. I would revisit that, see what's changed, and make sure you're readjusting accordingly. So I think to the extent you have a plan, it's a lot easier to pivot and make decisions. If we're talking purely just what to do, I think my best advice typically is, let's figure out ways that we can save money. So how do you ratchet down spending in whatever capacity you can, whether it's business or individual? Are there areas where there's maybe non-essential needs going out the door that you could potentially save some cash on to create a better balanced budget? And that's basically what you'd want to be doing, is going back through your budget, your income and expenses, if you're a household, how some of these programs might impact you as a business or as an individual. I'd be definitely going back, focusing on those things and figuring out, what is my strategy to get through this? How long might this be? When can I get employees back to work? When can I get back to work if I'm an individual? And kind of planning a worst case scenario as a contingency and figuring out what we're going to do in that scenario. But then backing into, what do I do today as well is really, really important with just cash flow. The last part is stay healthy. I mean, I think that's obviously it's something that is like duh. We all know, but I know my family and I know many families I'm talking to. This is something that's unique that we've not experienced, and working from home, balancing kids, balancing the work-home life balance is getting disrupted right now. In some ways, in a good way, in other ways, in bad ways. And we're seeing people work longer hours. Ironically, we're seeing people have a harder time of separating work and home. And we're learning how poor all of us individuals are that aren't educators, how bad of teachers we are with our kids. And I just think, creating some routine, creating some systems for your family and your household, staying healthy emotionally, and trying to balance it all is really, really difficult. So I think to the extent you can do those things for yourself and your business, I think it's going to be important. If you have a lot of employees, or if you have any employees, make sure you're checking in on them. We've had a lot of virtual meetings with our team, and those have been really, really successful to just check in, make sure folks are doing okay, and that they're healthy and making it through this. I think we all need a little bit of human interaction. So I think that's important to stay connected with your teams. My general advice.
Right on. Thanks. I was making notes. I really appreciate that, Matt. Rick just came in with a question. It touches on some of the things you've talked about, but maybe not exactly in this way. I work for a gym franchise owner, and gyms are closed, so our employees have been laid off for now, but obviously rent and utilities still continue to come in. Those bills still continue to come in. Can we use PPE loan money to get us through until we can reopen?
My understanding is a portion of it can be used, but I think it's like 75 or 80% needs to be used for employee salaries or benefits. And so I think there's a limitation on how much you can use for those other types of things. My recommendation would be to look at the other SBA options. The EIDL loan is probably more suitable for what you're trying to do there, and would probably give some really good longer term cash flow options for a specific company like that. But I would address that with probably a CPA or attorney before applying to either one. I would also go onto the SBA. There's some really good resources on there on specifically like what exactly can be included in those dollars. And there's other SBA loans as well. The 7A loan, just in normal SBA opportunity loans exist that I think could be a good solution long term as well. I don't know if that answers the question. Was there a second part to it?
No, that was it. I think you touched on all the points that Rick was curious about, and that looks like the extent of the questions we have. And given a couple things, given that there was a massive amount of information packed into your presentation, I think everybody appreciates your willingness to share this with folks later. And then of course this is being recorded, so everybody will be able to share this. Once it's posted on WooStream, people will be able to share it across social media and make sure their friends and fellow business owners who might not have had a chance to watch it live today will certainly be able to watch this on demand. So that's the good news there. This presentation will be available for months and months to come for folks who would benefit from these strategies and this information that you shared today, Matt. So thanks so much.
Absolutely. And I suppose I'll end it with, this is, reach out to your CPA, your attorney. There's a lot of people who are way more informed than I am that are dealing with this on a day-to-day basis. So this is intended to be a summary, even though there's a lot of information. And so reach out to your financial advisors, your CPAs, your attorneys, other professionals in your network that can help out. I know there's several folks in the Willamette network that are doing a whole lot of work on this right now, specifically. So, don't be afraid to reach out to those folks as well.
Excellent. Well, thanks very much, Matt, for this excellent and engaging presentation. Hopefully our audience enjoyed and learned from this presentation today as well. And speaking of our viewers, thanks for joining us today. If you enjoyed this presentation, stay tuned as we'll be adding new content weekly. Please share your feedback with us and send suggestions to alumni at willamette.edu.